Want to save money on your taxes? Let's talk about dependents and how they can reduce your tax bill. A dependent is someone you financially support, like your child or a relative. Claiming them can mean tax credits and other benefits, but the rules can be tricky. Let's break it down. There are two main types of dependents you can claim on your taxes: qualifying children and qualifying relatives. For qualifying children, the rules focus on their relationship, age, residency, and financial support. A qualifying child could be your child, stepchild, foster child, or even a sibling or grandchild. They must generally be under 19 or under 24 if they're a full-time student, although there's no age limit if they are permanently disabled. Additionally, they need to live with you for more than half the year and cannot pay for more than half of their own expenses. Qualifying relatives, on the other hand, have different criteria. Their income must be below a set threshold, about $4,700 for the year, and you must provide more than half of their financial support. When it comes to relationships, they don't necessarily have to live with you if they're closely related, like a parent or sibling. However, if they're not related, they must reside with you for the entire year to qualify. These distinctions help determine whether someone meets the criteria to be claimed as a dependent on your tax return. Why does this matter? Claiming dependents can lead to significant tax benefits. For example, the child tax credit offers up to $2,000 per qualifying child under the age of 17, while the credit for other dependents provides $500 for qualifying relatives or older children. Additionally, if you qualify as the head of household, you could benefit from a larger standard deduction, which can further reduce your taxable income. To qualify as head of household, you must be unmarried or considered unmarried at the end of the year, pay more than half the cost of keeping up a home, and have a qualifying person, such as a dependent child or relative, living with you for more than half the year, except for certain dependents like parents, who don't need to live with you. These benefits can add up to significant savings during tax season. But remember, there are important rules when claiming dependents. A dependent can only be claimed on one tax return, so coordination is crucial in cases of shared support. You'll also need their Social Security number to include them on your tax return. For divorced or separated parents, the custodial parent, who the child lives with for the majority of the year, typically has the right to claim the dependent unless they sign Form 8332 to release the claim to the other parent. The government gives you the opportunity to write off dependents as a reward for taking care of others, so don't be shy to use it. You deserve it. Got questions? Drop them below, and let's make tax season less stressful. Also, I create these videos to increase financial awareness and help people achieve a higher sense of financial literacy, but I'm not a professional financial advisor, so please talk to an advisor before you jump into anything serious.